Hi, my name is Karthika and my metric number is EX03690. Today I am going to present and my question is, to what extent investors use financial statement to make investment decision? So it's a financial statement is relevant and I am going to discuss about this. First, I am going to talk about investors. Investors need financial statement to assess the viability of the investment in a company. Investors may predict further dividends based on the profit disclosed in financial statements. Furthermore, risks associated with the investment may be gauged from the financial statements. For instance, fluctuating profits indicate higher risk. Therefore, financial statements provide a base for the investment decision of potential investor. Based on this, investor need a financial statement whether to invest in the company or not. Next, I am going to present one of the financial statement, that is balance sheet. The balance sheet is important for investor in that they can see how big the organization is by looking at the total value of its asset, and can also see how the business is funded and how much is funded through loans and other liabilities. This balance of owner equity versus liability given an idea of how risky this business is. The balance sheet also provides other important information such as the value of inventories, the value of credit owed to the business such as account receivable or debtors, and the value of short-term debts to others such as account payable or creditors. Next, I am going to present about income statement. The income statement shows an investor the profit or earnings, the sales, the cost of goods sold, other income, and a breakdown of major expenses for the business. The income statement, also known as profit and loss, shows how well the business performed during the year, how much profit was made. This is one of the most important indicators of how well a business is doing. Next, I am going to present about statement of owner's equity. The statement of owner's equity breakdowns changes to equity during the year, showing new capital investment, profits, and drawings by the owners, known as dividend in a public company. These can be pretty important info for potential investors to know. Next, I am going to present about return on equity. Return on equity, or is called as ROE, is a common profitability ratio used by many investors to calculate a company ability to generate income from shareholders' equity or investments. The higher the return on equity, the better the company performance since it is generated more money per each dollar of investment in the company. Next, the cash flow statement. The cash flow statement shows the flows of cash into and out of the business during the year. This is important for investor because the income statement could show very different figures if the business made a lot of sales on credit or had a lot of expenses that were still outstanding, not yet paid. The cash flow statement show cash movements, and this is very important to make sure the business has sufficient cash at all the times. The cash flow statements also show major inflows of cash like loans and major outflows of cash for capital investment. Based on this, these are the 5 statements of the financial statement are important to the investor to make decision whether to invest in the company or not. Next, I am going to discuss about, is financial statement relevant? A financial statement is relevant when it has a data that is valuable enough to make predictions or estimation about further events, like calculating the further cash flow, which will be important to the investors in making decision. Many stakeholders are use past financial statement to analyze the further future performance of the company regarding profitability. It should be of accurate data following accounting standard. Any inaccurate information may be misleading. Therefore, any such false data doesn't come under the definition of accounting relevance. This kind of information cannot be of an use of the company in making decision. In short, accounting relevance should contain accurate and orderly information. The relevance of accounting number depends on the person using it, and it will hold more meaning if it has been used over some time and more useful if one understands the generally accepted accounting principle based on which the financial report has been prepared. Finally, relevance in accounting also means that it should be useful for the decision making process for the end users. The information should be understandable and timely. The financial statement should be in proper accounting format. The information should be useful for the investors in making the important decision of whether to invest to the company or not. Based on this, I am telling the financial statement is relevant because it can make a decision whether to invest in the company or not with the financial statement. That's all from me. Thank you.